We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Before we get into our black screen news item for the week, I just want to explain something about Read the Ticker, which is better than most other online software packages. When you want to examine a symbol or a security, you want to get an idea of the trend, the momentum, supply and demand patterns, aka Wyckoff patterns, maybe Elliott wave or whatever else you think is important, the volume patterns, and you want to be able to do that pretty quickly. And to do that, you really need a consortium of different chart types to look at trend, support and resistance in different ways, which highlight different aspects of price action. Just like your local medical doctor, if you ever go into hospital, a doctor runs checks on you, keeps progress on you, so they can look at the matrix of your condition. It's exactly what we do at readtheticker.com. If you click on a symbol anywhere in the system, you're going to get a reference to a swing chart pop-out. That swing chart pop-out is going to give you a page like this. Wide range of charts I've got here. It's probably about 10 charts. And you define them yourself through the input. Swing chart defaults, you can load up 9 styles. These are styles which you've predetermined through the analysis chart. You might have created a momentum chart, you might have created a historic chart, quarterly data, monthly data. You might have created a trade signal chart. Now you want to combine them all together so it gives you a quick snapshot. And we have a few pre-designed charts you can look at and turn off and on just to help you out. So back to the news item. Now, 2 charts which are negative US dollar. That means when the US dollar goes down, that helps out these securities. Are the GDX gold stocks and Bitcoin. Now, 2 patterns which are of great interest. Here's the GDX, and as you notice, we had strong. We had strong support there, and then we had a bust down on that support and a recovery and carry forth. We're going to have sign of strength here. Now, when this is a monthly chart, so therefore supply and demand patterns are looking at the Richard Wyckoff logic and Richard Ney logic, is to show that this action here, which is a bear trap, which is a massive failure for those who believe the stock is going to go, or the security is going to go down. Okay, but it's also a huge signal when it recovers. Now, normally if you get price breaking down, it might recover and fail here, and you'll get a price action like that. But here it recovered past the previous support line, narrow resistance, and goes right up into the previous consolidation. That is true sign of strength, and is very, very bullish. That's a bear trap completion. Once again on Bitcoin, we had massive support here, a punch down, everyone thinks it was going to go lower, a recovery, breaks the previous support, which is now a resistance line, and it goes into the prior zone of consolidation, but it does so in a huge manner. Okay, huge signal. But the chart that highlights the real bullish nature of this bear trap and the volume and the price actions behind this is our daily point and figure chart in this particular security. So if I go here, here's our point and figure chart for Bitcoin, which is a standard issue of a swing chart. Just draw a horizontal line in here. Here's the horizontal line support, the smash down and the recovery. But look at the volume pattern. This is our volume hills indicator. Lots of volume on the way down. Everyone was nervous as it would go down to here. But as you can see, the supply volume, it's the red hills dried up, and the blue volume took over right there. So that's where you get bullish. See that red failure there? There's just no volume in it, and it's taken off ever since. And as you can notice, there is literally no supply on the down day, on the down bars. Now you might say, well, what price action is in this a point and figure chart. We have a price chart which highlights the volume in that action. So here's the green. You see the green areas and the red areas, the green areas and the red areas. That mirrors the blue and the red areas above. So if you want to see the price action in the red or the blue, you just scroll down and look at the pop out and look at the price action here, and obviously the volume associated with it if you need more detail. There's a volume wave. This volume wave here, as you see that, is a mirror, oops, of these volume bars here which make up the volume hills. So you have to study the chart. But the point about this, if you're a Wyckoff trained or you understand supply and demand, bear trap, no volume on the pattern as time comes along, huge bullish sign, the recovery, and quite frankly, this is the last point of supply here, last point of supply there, and you see there's just literally no supply. This was always going to go up, and literally I believe it's going to go all the way up, probably test 12,000 before it even slows down, because there's just no supply. I mean, obviously if supply turns up, I'll get a warning. Now if we take that same thinking and we go along to the GDX, now the best chart to look at in this particular case is the weekly chart. The daily chart's not enough detail, so two constraints. So the similar situation here, we had price break support, resistance, huge volume down. That was all accumulation, just like the Bitcoin chart. That huge volume, that's all accumulation. It's punched down, and now the big boys to accumulate. As Richard Ney would say, price moves into a zone so they can release volume from people's positions. They move price to scare people, either to release volume or to attract volume. That's exactly what they've done here. They put the price down here to attract volume and hit stops or what have you, and bring in the shorts, reverse it very quickly, and as you can see here, there's very little supply on the GDX on the way up. So this area here was always going to do well on the bullish side. Now if you compare, here's a bit of a quick learning one. You compare this area here to this area here. As you can see, the red, there's just too much supply around for it to take off. See how this red zone here, in this area here, there's just too much supply around. But right here, the supply drops down. So this is the same sort of pattern. It punches down, recovers, doesn't really take off, doesn't break resistance, because quite frankly, there's just too much supply around and it just stops the advance. Obviously, the traders on the desk can see the supply is there, and they don't do it. Once they see this here, there's more demand around, no supply, it's easier to punch up. Okay, so it's the contrast between too much supply and a recovery or recovery bear trap. This was a punch down, this is like a spring. Similar sort of action, but this time there's just no supply around, so the door is open to go higher. Now as an investor or trader, to see that type of action when you have higher highs and lower lows, and supply dry up in the lower lows, there's nothing more exciting than that, especially when you're in a pattern and you want to be able to accumulate before it breaks out to higher highs. So this is an early warning signal, and the beauty of Richard Wyckoff logic. So there we have it. That's understanding bear traps. In a situation where a bear trap fails and a bear trap that works, and obviously the beauty of an extremely bullish bear trap. Thanks for watching.